In this video, we're going to be going through the 4 core principles to raising capital. Now, if you like this video, I suggest you like or subscribe it because we've got plenty of other content for founders, which is really focused around raising capital. Now look, when you're going to go down the capital raising part, there's 4 key principles that you need to know and learn as part of it. The reason is because if you don't, it could literally cost you millions. The first step is to get ready. Now, what does that mean? When we're talking to companies about getting ready, everyone likes to talk about investor ready checklists and so forth. What we're talking about is getting your information in order. Now, in our Chris platform, we've created a specific folder structure that makes it really easy for you to know how to structure your information in a way that an investor is going to be looking for it to have it found. Now, why this is so important is from my own journey, when I went through this process, I made the mistake and wasn't ready. When I had an investor come knock on the door to us and say that they were interested in investing into our company, I wasn't prepared. It took me 6 to 8 weeks to get that information in order in the way it should be. Why? Because we're busy. We're busy managing the business, we're dealing with HR issues, we're making sales for the business, we're focused on tech development. There's all these different areas that we're across. The challenge is when it's not ready, the impact it could have on your business is extremely costly. So from my part, once I got ready, I said to myself, now that this is ready, I am never going to let this slip because it's so much easier to update something than it is to actually replace it all. So that's the first principle. 1 is get ready. 2, stay ready. As I said, it's always easier to maintain something than it is to constantly be creating it again. So what we always recommend, we recommend that every quarter you look to keep your data room as up to date as possible, whether it be adding your latest company announcements, your financial updates, your board updates, all that. Just make sure you keep on adding it to your deal room as you go, your different HR contracts, etc. By doing this and maintaining it, you are simplifying your life so that if an investor comes to you or a potential strategic opportunity comes to you, you are always ready. In fact, one of the key things we always say to people is that as founders, there's 2 things that we never know. We never know what opportunity is around the corner, and we also never know what disaster is around the corner. And that disaster part is extremely relevant for people right now who are scrambling, trying to get themselves prepared to bring their capital raising forward. So that's principle number 2. So principle number 1 was get ready. Principle number 2 was stay ready. Principle number 3, always be raising. Now, this may be controversial for some venture investors, but that's not our focus. My focus is on you. The first part that I'll say to you about doing this is some people call it either agile capital raising or they call it the rolling close. The reason is why I say always be raising. You may not necessarily be taking money into the company at all times, but what you're effectively doing, you are making sure that you are having the right kinds of conversations that if you do need to raise money, then you have that capacity. And that is what's the most important. Also, what I've found for myself personally, the more I speak with investors, the more I have conversations with investors, the more it helps shape my thinking and gives me insights into the way that they're thinking as an investor. In fact, a lot of the positioning in my business and the way we're actually structuring it has actually come from conversations with investors. The other part is we find that often some of your most strategic conversations will come during the time when you're actually raising capital. So the tip number 3 of always be raising is important because we want you to always be open for potential of strategic opportunities for your business. Also, we want you to be prepared for whatever opportunities or disasters may come around, right? So that's tip number 3. Core principle number 4, super important. Get to a fast yes or no is one of the most important things that you'll ever learn from our conversations, because the reality is if getting a no 3 months from now is much more painful than if you could have supplied all the information that could have helped that investor come to a no within 1 week. You would much prefer to get a no within 1 day than to get it in 3 months from now. Our ego doesn't want to get the no, but when it comes to this process, efficiency is everything. Capital raising can feel almost like a second business. So we want to make sure that you're set up in such a way that you are getting as efficiently to a yes or no as humanly possible. Now, we do have other videos that sort of cover off how you can actually do that, so I won't cover that in this video, but it's really important that you're always thinking about that. In your mindset, you're always about, how can I help the investor make the decision, whether it be yes or no, as fast as humanly possible? And sometimes that no can be valuable because you can learn from it. So there are our 4 key principles. Now, as a company, I'd love to share with you, one of our key values for us, so one of our key vision for us is creating opportunities for tomorrow. Everything that we do, every action we take, every email we send, every virtual event we run, every live event we run is about creating an opportunity that doesn't exist today. That is at the core of what stands behind WI, and also one of the principles behind what we build with Crisp. So if you like this video, if you receive value from it, like it, share it, and make sure you subscribe to our channel.